Did you know that despite a recent Federal Reserve rate cut, US stocks ended the day mixed? What does this mean for investors looking at record highs on the horizon? Hey everyone, welcome back to the channel. Today, we're diving into a hot topic that has everyone buzzing: the mixed performance of US stocks following the Federal Reserve's recent decision to cut interest rates. This is a significant event that could have major implications for investors like you and me. So, what's going on in the market right now? Why are stocks behaving this way after a rate cut? Stick around as we break it all down. Alright, let's get real for a moment. Navigating the stock market can be tricky, especially when it feels like things are all over the place. We've got a mixed market environment right now, which means some stocks are up while others are down. This can be confusing for investors trying to figure out where to put their money. On top of that, there's a cloud of uncertainty hanging over future rate changes. Are we going to see more cuts, or could rates go back up? Some investors might be feeling a bit anxious about making the right moves. This uncertainty can lead to hesitation, and when investors hesitate, it can create even more volatility in the market. So, how do we make sense of all this? Now, let's dig deeper into the Fed's decision to cut rates. The central bank made this move to stimulate the economy, aiming to boost spending and investment. Lowering the rates generally makes borrowing cheaper, which can help businesses grow and ultimately benefit the stock market. But here's the kicker: not all sectors react the same way to a rate cut. For instance, tech stocks often thrive in a low-rate environment because of their reliance on cheap financing for growth. They can invest in innovation and expansion, making them attractive to investors. On the flip side, financial stocks could take a hit since their profit margins often shrink when rates go down. This is crucial for investors to understand. If you're investing across different sectors, you need to be aware of these dynamics and how they might affect your portfolio. Additionally, let's talk about how this rate cut impacts consumer behavior. When rates are low, people are more likely to take out loans for big purchases, like homes and cars. This can drive demand and, in turn, push stock prices higher in consumer-driven sectors. Think about it. If mortgage rates drop, more people might decide to buy homes, boosting construction stocks and related industries. However, the mixed signals coming from the market can make it hard for investors to gauge where to place their bets. Should they follow the tech surge or be cautious with financials? It's a real puzzle, and market analysts are weighing in with their insights. Some analysts suggest that while tech might be a safe bet, financials could rebound if rates stabilize or rise again. So, what are the key takeaways from all of this? Some market analysts believe that this rate cut could pave the way for record highs in the near future. They argue that as the economy gets a boost from lower borrowing costs, we could see a surge in stock prices, especially in growth sectors. However, there's also a warning here. The mixed performance of stocks signals that investors are cautious. They're not fully convinced that this rate cut will result in a steady upward trend. It's a balancing act, and while some are optimistic about potential record highs, others are keeping their guard up. This divergence in sentiment is something to watch closely as we move forward. Let's not forget the global context either. The interconnectedness of the global economy means that, while the US is making moves, other countries are watching closely. Any changes in international markets can ripple back to the US, influencing investor sentiment and stock performance. Additionally, geopolitical factors, trade tensions, and other macroeconomic variables play a role in shaping market dynamics. Looking ahead, it's important to stay engaged with market trends. This mixed performance presents both challenges and opportunities. Savvy investors might look for undervalued stocks in sectors that haven't responded as positively to the rate cut. Others may choose to diversify their portfolios to mitigate risk during this uncertain time. To wrap things up, we've covered a lot today. The Federal Reserve's decision to cut rates has led to a mixed bag in the stock market, creating both opportunities and challenges for investors. We've seen how different sectors react differently, and we've highlighted some insights from analysts about potential record highs. But remember, with mixed signals and uncertainty about future rate changes, it's crucial to stay informed and make strategic decisions. Now, I want to hear from you. What do you think about the Fed's rate cut and its impact on the stock market? Are you feeling optimistic or cautious about investing right now? Drop your thoughts in the comments below. And if you're looking for more insights on stock market strategies, don't forget to check out our next video. Thanks for watching, and I'll see you in the next one.